Welcome. I'm Jim Farish of Jim's Notes. For the last 20 years, we've been specializing in sector rotation. So I've asked a friend of mine, Michael Thompson from TC2000, which is produced by Warden Brothers, to join me because he thinks I'm dysfunctional when it comes to computers. So, Michael, welcome.
Hey, thanks, Jim. It's good to be with you. I've been trading for a good while, learned a lot of things from you along the way as we've explored together some of this sector rotation stuff. But today, I guess we'll show them how they can do some of our techniques with their TC2000.
Well, I think it's going to be fun because you and I kind of, between our imaginations, came up with this desktop that we're going to talk about and how you can actually kind of bring the market to life, which is the more I use it, actually, I get fascinated with it, and I've been trading for 30 years. So it's a lot of fun, and we're going to kind of go through how they can use it through our club. We'll talk about the intricacies of what makes it work, and then also just talk about functions they can use if they're a telechart user, how they can use it on their own system. Right. And then more importantly, if they're not, how you can get them to be one.
We'll make that happen.
All right, so with that brief introduction, let's get started. And I want to, the key of this is to try to put it in terms that we can all use. And if you want to, if you can follow along Jim's Notes, it's on the screen. Most of you got here through Jim's Notes, so I'm not going to belabor the point relative to what that is. And what I want to do is go over to this magic chart that Michael so eloquently built. This is the good part. Remember when we had to have it split into twos?
I know. Yeah, I'm really glad we got the 10 lines on one chart now.
But it makes the market come alive, so to speak, for me on a day-to-day basis, and that's really what I want to focus on today. So what I wanted to start with is just the general outline of what this is, and then have you kind of tell them how the desktop is built from a standpoint of how you use the charts and how you can move the windows around a little bit. Because I know some people like me are technically challenged, I'll call it that, and are slow learners relative to that. And what I want to really kind of make people is the comfortability of using this on a day-to-day basis to see the markets and to trade the markets in a format that they're comfortable with.
Well, and honestly, with the workspace that you've created, you've given them a starting point. And that's one of the advantages, I think, of taking advantage of this particular workspace you've created. They've got a starting place. They don't have to create all this from scratch. We can show them how to use it. But it'd be a really easy starting place for them.
All right. The key for me has always been simple. I finished reading the book Insanely Simple by Ken Siegel not too long ago, and it really brought home to me how simple this needs to become. And I've always been attracted to the S&P 500 because it's one of the right now, it encompasses of roughly 70 to 75% of the U.S. equity markets by sectors and weightings. And I think that's dynamic and that is so big of a component of the market, even though it's only 500 stocks. But secondly is that it's easy to look at the 10 sectors of the S&P 500 and then to drill down even further, which we'll go through in this video presentation of trying to show people how to actually find the needle in the haystack, so to speak, by first finding the haystack.
I think that's really important because when you look at the market itself, even in Telechart, we have, 230 some industry groups. That's still a lot of breaking the market down. I mean, that's just complex. When you use just these 10 ETFs that you're using, you're breaking the majority of the market down into 10 different sectors. That's manageable to understand and to work with.
Well, and that's why we've added this table here to the left, is that what we tried to do here is to break this down so that the 10 sectors of the S&P 500 are right here. And you can see them. They're not. I mean, you can sort them obviously by different criteria or rows or columns that are involved in this. But what I'm trying to get people to see here on this is that we have added a couple things since you and I originally built this, and we continue to try to improve it. And two, which is on the top and the bottom, which is where they always seem to end up, is the volatility index. And one is being long volatility, one is being short volatility, but it kind of brings to light is volatility picking up in the market? We'll come back and look at some charts on how that works. But then the 10 sectors of the S&P 500, SPY, which is the index itself and an ETF, and then we've added SH, which is short the S&P 500.
Right.
So it gives you just everything that revolves around these 10 sectors in one little table. And what we're going to show is the dynamics, I think, of how this table, as short as it is, with, I think, 14, 16
Right.
positions on there, how that little table can actually make people a better trader.
Well, let's show them how simple something is. It's sorted by percent change, and we can show them that this is what happened today in the sectors. You can see very clearly, very quickly, with one click, what moved up in the market, what moved down in the market today. We also added a column when we built this of year to date. You can sort by that, and you can see which sector has done the best this year since the beginning of the year. So even with those simple columns, you're able to very quickly assess in different time frames what's going on in the market.
Well, and that's the cool part of this, and we'll show about how to take just this, I call it a scatter graph for lack of better terminology, but how you can take the scatter graph and then create it in such a way that you can jump from here to the table. So in other words, we can jump from this right over to this, and all of a sudden the market comes to life for us in a simple format that's easy to use. And so anyway, the key here is that with this drawing tool, I wanted to go back because, sometimes I think that you can see one of the things that Michael said was right here, which is the percent change. So this column is going to give you all of the percent change relative to what's going on in that format. The other thing that you will see here is that you can also over here, when we're going through this side of the table, is it allows us to actually pull things in that work very clearly overall. The key for me is that when I'm looking at this, like just as a quick aside here, you can see the brown line there is XLV. If I want to look at XLV and how it plays into what's going on, let's say you use year to date, I can go over here and look at what's leading the market year to date and where does XLV fall? Well, it's way down here. So what you start to see is, actually we sorted it upside down. But when you see that it's actually underperforming 4 or 5 of the other sectors, even though in the short term it's outperforming. So you get a picture of longer term plays that you can build and shorter term plays that you can also capture off of this table.
I think we should talk a little bit about why we created this the way we did. Why did we use the S&P sectors? And then give them an idea of how these two things work together. These lines over here represent those particular sectors that you have in your watch list. So just to kind of help them understand what they're looking at, why did we choose these particular 10 lines, as it were?
Well, and that's, I mean, those are important points because when you look at these, one is trading volume. You can trade any of these ETFs, the spiders ETFs, which are the S&P 500 index, so they directly correlate. They update these ETFs to correlate with the S&P 500 on a regular basis so that they're always correlating directly. And then secondly is the volume component is there. So they're the most liquid ETFs out there by volume, so it gives us tradability regardless of account size. And for me as an advisor, it gives me that leverage I do need, being able to ladder in $10 or $20 million into a position. So it helps by that. And then thirdly, I think it's important that people understand that the S&P is probably the most followed index of all the indexes when people talk about the broad market. And I know people talk about the NASDAQ, but it's really gotten a tag attached to it that it's a technology index. And, you know, the overweighting, especially of your large cap components there of Apple, Microsoft, Dell, Intel, overweighting. So I think the S&P gives you a much better picture where the largest sector weighting in the S&P 500 is the info tech sector, which is 20.2% currently. But what's important about that is the largest holding, which right now is Apple, is only 4.3% of total weighting of the S&P 500. So it gives you, I think, a better view of what's going on.
Well, there's a couple of reasons why I'm really glad you chose this, and really it has to do with the trading aspect. If the market's highly correlated, if everything's kind of acting the same, it's very easy to back out and actually just trade these sectors, just trade those ETFs, rather than trying to drill down and find individual stocks. If they're all kind of acting the same anyhow, you mitigate some of your risk and you can trade those ETFs. So they're tradable sectors. But the other part is these are all made up of individual stocks, and they're kind of pre-qualified by the fact that they've been selected for these particular major ETFs. So instead of having to look at a whole sector, say the healthcare sector or consumer staples, instead of looking at every stock, I'm looking at a select group of stocks that have been put together, kind of pre-qualified by being in these ETFs, and that allows me then to drill down into those, and we'll show them how to do that in a little bit. Drill down into those and find stocks. So whether I want to back away and trade the correlated market, or when the market gets a little more scattered and uncorrelated, I can drill down into these. Those are really effective ETFs to do that with.
Absolutely, and they're the large cap stocks, so you're not worrying about them being too small.
Yep.
Volume's going to be there 9 times out of 10. You're going to have the volume because they're large cap stocks. So it is. I just think it's a good place to start. It's a good tutorial for people, and it's one that we've actually used more than any other, and still use more than any other.